Hey everyone, Paul and Jason here with Cryptoversity. Jason, what's happening, man? How are you?
Oh, I'm doing great. How you doing?
I'm doing wonderful, man. Really excited for today's episode. Guys, please, if you find any education or entertainment value here, please like and subscribe below. It helps us help you. And always remember, we're not financial advisors, so please do your own research. Jason, so last episode we talked about Rectember and how you called it out a few episodes ago. Crypto market's been plummeting. It's been pretty scary lately, but I'm hearing on crypto Twitter a lot of people say September is going to be bullish, and I'm it's contradicting to our statement. So I just wanted to hear your brain on it and dive deep and see what you had to say about all that.
Yeah, so you're always going to be able to find conflicting opinions. Let me just paint a picture of what I'm looking at. So what I'm looking at, I see nothing good. So we'll start off with what the Federal Reserve said last Friday. They said more pain is ahead. No pivot. Be prepared. That's in short. That's what the 8 minute, Jerome Powell interview came down to.
Yeah.
And they rarely say those. Like, for him to say no pain lets you know that he's trying to give investors a heads up that the housing market we don't care about, stocks we do not care about, crypto we don't care about. They're so focused, and they should be, on getting inflation down that they're willing to wreck everything except one thing. They're not willing to wreck the job market. But the data on the job markets is extremely healthy, which gives the Federal Reserve a lot of leeway to increase interest rates dramatically in order to get inflation down.
Okay.
So in this month, we've got a lot of economic data coming out as far as housing and unemployment and inflation rates. So there'll be lots of, I think there's 7 or 8 points of economic data coming out. And each day that that data comes out, if it's bad, you're going to see the markets react that way. And if it's good, I don't know if it can offset what's already been said by the feds. So you have that, right? And most likely now the word on the street is that 75 basis points is how much they're going to increase interest in September. That's a dramatic increase. So you have that, right? But you have other things too that I'm looking at that are extremely concerning. For example, the Chinese housing market. It is extremely volatile and ugly right now. I think they're on their 12th consecutive month of decreasing housing prices. You've got Evergrande, which is their biggest real estate developer, who's already said they can't make their payments on their loans, which means that other housing developers can't make their payments as well. And the Chinese government just decreased their interest rates, which lets me know that this is their only play. Like, they're hoping that the housing market doesn't collapse, because if that collapses, it'll be a domino effect on the whole Chinese economy, which will affect the whole global economy. That's concerning me. I would consider that a possible black swan event that would be more devastating than most people can imagine.
Yeah, and I was wondering how can that impact us here? Like truly, what role can it play?
Yeah, so the world is extremely globalized. In the 90s, that was the trend. This is why NATO and all these, the European Union, is why they were created.
Mm-hmm.
But now that the world is so globalized, the housing market collapsed. That means that Chinese banks go under. If Chinese banks go under, that means the dominoes go globally, because all banks and economies are interlinked.
Yeah.
So one major player goes down, we all go down. Europe, America, everybody. But China's not the only scary thing out there right now. Russia's economy. Most people don't know this. They've been extremely quiet about this, but it is a house of cards. It's smoke and mirrors. They are getting demolished. Like, stores are going, closing left and right. Malls are empty. Their currency is just a complete smoke and mirrors. Like, it's bad. It's really bad. Money's leaving Russia at an extremely high rate. But Russia, which we called this out in our earlier videos, when Russia turned off the pipeline to Europe, which is a member of NATO, and NATO declared financial warfare on Russia when they invaded Ukraine, when they turned that pipeline on, they only turned it on at 20% capacity. And we called this out. We said that's a warning shot. And right now, the estimates are that in Europe, that energy bills for the average homeowner is going to more than 10x this winter. 10x. Imagine what that would do to the average American if you 10x their energy bill.
Yeah.
Right? That's devastating. And that also could trickle down to the rest of the globe. Like it's not isolated. None of these events will ever stay isolated since the global economy is so interlinked.
Yeah.
That's another red flag that most people aren't talking about that concerns me. And the last thing that concerns me that most people just can't wrap their head around, but that's the U.S. housing market. You see, as you keep increasing interest rates, people are less likely to borrow. For example, if you were to borrow a year ago, $500,000 to buy a house, that mortgage payment at 2.5% would be somewhere around $1,500 a month. Today, at 5.5%, that mortgage payment has more than doubled. So the likelihood of buyers wanting to buy houses or people in current houses are less likely to sell, because why would you get out of your current house if you know you're going to get into a much higher mortgage payment for the same house?
Yeah.
And that's just starting to show its head, but it will get aggressively worse. And just to give an example how effective increasing interest rates are on the housing market. This time last year, so year over year, refinances are down by more than 85%. These are very dramatic things that can have a big effect on an economy. And if an economy is suffering, people are less likely to invest, especially in risk-on assets like Bitcoin or crypto assets.
Yeah. Yeah, I think that not only that, but that in turn impacts the job market too, right? Because there's a lot of people in finance and in banking and refi and all those different roles, and they're probably getting slammed right now, like looking for work, I would imagine. So maybe numbers look good, like you said, but I wonder how long that will last. Like, what's your take on that?
Yeah, that's a really good point, Paul. So you can hear tech companies are announcing layoffs. I think Snap just announced that they're going to cut off some like 20% of their workforce. These things tend to happen in snowball effects, right? So everyone thinks that the job markets are super healthy right now because the data shows it. But if you look forward 6 months as a housing collapse happens, as you know, look at how many loan officers and mortgage brokers are going to be out of work because of refinances, right? And then from there, it has a trickle down effect where if one person loses his job, since he's not spending money, 2 other people lose their job. And this is what happens. And this is why I think September's going to be wreck timber. And I think the rest of the year is going to be pretty rough. I really do.
Yeah, I know. Like you said, it does trickle, right? Because, you know,
even if you look at the technical analysis, none of it looks good. Bitcoin was barely hanging on to 20. It kept. Remember, we called this out. Every time Bitcoin pumped and people were super bullish, it would hit 24,000 and bounce back down. The more times you hit that level of resistance, eventually it's going to break down hard. And here we are around, what is it, $20,000? That's Bitcoin right now, right? Once again, as it keeps bouncing off the $20,000 as a level of support, the more times you bounce on it, eventually it breaks down. And the next level is 17.5, which is a previous all-time low. If we keep bouncing on that, eventually we find a lower spot. I don't see where the momentum is going to come from that puts us on an upward trend in these economic times. I don't see it.
Yeah, and we're going to keep our eye on it, right? Because, you know, in crypto, nothing's science, right? Things change. We've been wrong before, but we're just going to keep on giving transparent information and education on this stuff. And yeah.
And Paul, I'm not a big leverage trader, but there are opportunities in these markets. If you, like, for example, before the Federal Reserve comes out on the 15th or 16th and announces the interest rate hike,
Mhm.
I'm going to place a long and a short, both with very safe stop losses. So if something dramatic happens, I'm going to profit either way. So I think what I'm trying to say here is, although it looks bad, if you educate yourself on these markets, there are opportunities to make money.
Yeah, you've been preaching that in almost every video. A lot of money's made in the bear market, but you have to make it the
Yeah.
right way and be educated behind it and not just fall into FOMO and crypto Twitter and things like that. Because you can hear anything you want to hear on Twitter or YouTube. There's one opinion of each side of it, right? Always. So, yeah.
Paul, you said that perfectly.
Thanks, man. Well,
Yeah.
great info today. We'll look forward to talking to you tomorrow, man. Thank you so much.
Paul, as always, I appreciate you.
All right. See you guys.